In this example, I want to take you through the triangle and pennants tool. We're going to identify some symmetrical, non-symmetrical, some ascending and descending, inclining, declining, some pennants, some bulls and bear flags. Don't get scared off by all the names. They're basically the same thing. It's a triangle that's just shaped a little bit differently, and we trade them all basically the same as well. So the first thing we want to do is we want to point out this 5-year T-note contract, and there's a nice big triangle right here. And I don't know if you saw that when we first turned the chart on, but eventually you'll start looking at these charts and these things will just start popping right off the screen at you. You won't be able to look at them without all these formations just jumping out off the screen at you. But there's a nice, this one we'd probably call this an inclining triangle or an inclining wedge. So there's an inclining wedge in the 5-year T-note, and of course the way we trade these is we trade a breakout at the top and the bottom of this point. Now notice how we have a false breakout right here, and those are how you have to be careful with these play around with these colors here a little bit. You have to be careful because those little areas right there are what get you caught going the wrong direction. Just like any good running back on a football team, he fakes one way and goes the other, and the market does the same thing oftentimes. You have to be careful because the market will fake one direction and go the other, and that's exactly what's happened here in this 5-year T-note inclining wedge. So here's a perfect triangle formation right here in corn. Do you see that when I flipped to it? It jumped right off the screen, didn't it? You couldn't help looking at that chart without seeing that beautiful perfectly formed triangle right there. And of course you buy on a break above and sell on a break below, and this one of course we would have sold and caught the market all the way down for roughly there's $1,000 move right there out of that triangle. And that's almost a perfect triangle, maybe even a pennant. Pennants and triangles are exactly the same, other than the fact that pennants are maybe just a little bit shorter. This one's probably a little bit elongated. It's probably more of a triangle than a pennant. Let's look back in history and see if we can see anything back here. Real quick jump right off the screen at us. I don't see anything quickly off that chart. Let's go to oats. Now oats is loaded with little triangles and pennants and flags. Let's look at this one. Here's a nice that'd probably be considered an ascending triangle, or excuse me, descending triangle. We got another probably a little pennant, right? Not a little pennant, maybe a little pennant, little triangle right there. What do you think of that one? A couple little triangles in there. Let's go into a different oats contract. There's our little wedge right there. Here's another one. See this one right here? Did you see that one before I did? See any more? What about this one? Did you see that one before I did? Anything else? Can you see another one? Can you see that little, what we call a little, this one would be considered a bull pennant right here. Little bull flag. The reason we call it a little bull flag is because it's on a bullish pattern. It's on the way up, and it's got a nice big long flag staff right here at the front, and then goes out into a little triangle or a little pennant. Of course, all these are traded the same way. We place an order to buy if it breaks above and sell if it breaks down. Buy if it breaks above, sell if it breaks down. Buy if we break above, sell if we break down. Now, narrow sideways channels, we've talked about them. They have a more likelihood of having the false breakouts that I talked about up here in the 10-year T-note. Triangles don't do that quite so often. They still do, but just not, I've noticed. Personal observation, I've noticed that triangles don't have as many false breakouts, and that's why I much prefer to trade a triangle than a narrow sideways channel. Sitting in this one, there's a nice little pennant right there. Look at this little sideways motion there with the nice big long staff coming up and then going sideways and then jumping up again. There we had the That false break out the top, and then it turned and went the other direction. There's another little flag right there. So it has a nice stand on it coming up, and then it goes sideways, and then it dropped right back down. Of course, we trade these the same way: break above on a buy on a break above and sell on a break down. There's another nice little triangle formation happening right there. So go around to all these charts and open up a whole bunch of charts, all the different charts and markets that you like to trade, and look for these little formations, and look whether you'd have made money or lost money if you'd have bought or sold on them. So if you break out into the top, you'd have probably lost money right there, because you probably held your stop loss back too far, and you'd have missed this turn unless you're smart enough to reverse your market. It's pretty hard to do if you're going to trade that, and I don't think I'd have traded that anyway. It's too hard, too fast. But maybe a little one like this you could have traded. This little triangle here for sure you could have traded. Okay, so go and look through your charts and look for your symmetrical, non-symmetrical triangles, your ascending and your descending, your inclining and your declining, your pennants and your bulls and bear flags. Just remember, they all trade the same. They're just a little bit different in where the point is on the triangle, whether you're flat across the top or flat across the bottom or kind of stubby or real elongated, way up like this or way down like this. It doesn't matter. It's just a different shape of the triangle or the wedge. We still trade them all the same way. So go find them and see how you like them.